All right, today is Thursday. It is a possible Thursday high template. Unemployment at 8:30. We're above the new week opening gap. There was no risk, no gain. We did take sell side session liquidity. Bullish bias in ultra premium. Draw to a daily range high. Risk close bearish. At 8:30, the bearish breaker, nothing happened. This, you see the ES on the left and NQ on the right. There was unemployment and consumer confidence at 8:30. Thursday, so maybe a little higher, but then maybe lower. Could be a turning point on the week. Actually, nothing happened, which I thought was interesting. I watched. Then we go to 8:30 and, 9:30, and what you see is the 9:30 breaker goes buy side, but buy side stays intact. Bullish conditions, no news. Again, thinking a little higher than maybe lower. 1 hour order block is inverted, so that means long potential. You start off with long with 5-minute breakers. The reason I didn't think long to begin with, or why I didn't think short to begin with, is because we're bullish. And while there is buy side above us, I have to accept that the market has to tell me that it's actually going down. I can't just assume it's going down because we're in bullish conditions. So bias is bullish, yet we're in high premium showing bearish behavior and setting up bearish PD arrays. Risk close actually did align with the bearish tilt. So other than day of week, I have no way of being certain that the market intends to go lower since PD arrays do not indicate bias. That means when something shows a setup, it doesn't mean you just take it because it's set up and because it fits all your criteria. You have to take it because it aligns with bias. Bias is what creates the flow. Nothing else creates the flow, only bias. Gold is showing higher highs with our lower lows, so that shows a good enough indicator that we're probably going down. The failure to displace at the open gives rise to the low time frame bullish breakers being used to run through the buy side, which I thought may happen. I thought may say take out the buy side first before the market does anything else. The second trade was the second test, but we dove down just before 10 a.m., which is not unreasonable, but it's not something I want to be part of, so I didn't take it a third time. All right, on the first one, I was stopped with 5, but I was stopped because I was too high on the PD array matrix and I wanted to go a little bit lower, and I re-entered deeper on a deeper array with 3. I cleaned up all the losses with good trade management, exiting at new highs. Why? Because we are in ultra premium on a day that could turn bearish, and we're showing bearish behavior, so we're not assuming that it will just race to our target. So I re-entered 2, having retested the breaker again when we did not meet buy side ahead of 10 a.m. And that's important because 10 a.m. is usually when you see these awkward conditions, 10 a.m. is usually a turning point where it'll flush and actually indicate what it's really going to do. So let's go to the charts themselves, and I'm going to rebuild exactly how to look at this day. Go to the daily, and we go to the daily range. Very first thing that we want to do is go to the first bear side, sell side support level right there. And then we'll go to the first buy side that has not been touched at the point of this, which was right there. Okay, so there's our range. That's what we're looking at. That range is what we're using to determine bias and day of week. So then we drop to 1 hour, and what do we see? Where'd all my kill zones and pivots go? Why is it not showing up? Okay, it doesn't matter. And then what we do is this. We put a fib on there that gives us the range, the premium discount. And everything we have is in premium. So just draw that on there. There's our premium order block. There's another one, just in case we get below it or invert it. Both can happen. And then the thing I care about is, the next thing I care about is all the way down here. There you go, order block, and then there's a breaker right there. But I thought perhaps myself that if that did get to that point, then chances are that was not going to be relevant, because it is likely going to take this out. So anyways, that's how I got to that. Then I drop down to 15 minutes, and I evaluate what I'm seeing. Let's tell the story. What is the story? Well, you have, if you look at the previous 3 days, you obviously have a bullish narrative. You have 3 days of movement. You have no particular references up here. There is a daily fair value gap right up here that is not currently drawn on. It is in my screenshots, but it's not currently drawn on. But the narrative here is that we have an afternoon breakout that creates an Asian session, then an inside London session, which its session low was taken, which automatically tells me that that's a breaker right there. That's a 15-minute breaker right there. And then that took it. So then we're looking again, and that is in our high time frame PD array. So that's important. And then the second one in our high time frame PD array is right there. Why is it right here? Just to point out, I want to say it again. Keep telling myself this over and 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 over again. Right there is the pivot before liquidity was taken. Liquidity was taken right there. So after this happened, we actually come back up at 10 o'clock. Oops, that is not the correct. Here we go. And then we run down lower to where? 50%. And we bounce for lunch. And then after that, it runs lower, taking liquidity and then dumping all the way down to this fair value gap, and perhaps this breaker here on the 15-minute that's in the fair value gap. So I could see a bounce there depending on what time it gets there. So then let's break down to the 5-minute. And what do you see? I want to just pattern out the longs that I took. Number one, you see at 8:30 that a failure to displace, even though we've taken session liquidity, we failed to displace. So what that does is it creates a breaker here and there, right there, because those are the ones that happened before we took liquidity right there. So what does it do? It comes down, and then at 9:30, we take liquidity again. Let me just show you how this works. We are not. Let me go down to the 1 minute so you can like really understand exactly what I'm trying to say. At this point, at 8:30, at this point, we are thinking, all right, if the bullish bias is going to hold intact, then it needs to take this out at 9:30. Excuse me, it needs to hold it at 9:30. If it takes it out at 9:30, then we're thinking, all right, that is an indication that we are actually going lower. Because why? Because it took the session liquidity out here, and then it held it, and then it held it again, and then it would have taken that out. So that indicates that we're actually going lower because we're in super premium in alignment with risk flows. However, what it did at 9:30 is it came down and then started to turn around right here. So as soon as it does this, then now you're reopened to your longs up into your breaker, into your smooth highs right up here. So it's easier to see on the 15 and 5 minute. Let's go to the 5 minute. So you can see that. So now you see what it looked like on the low time frame on the 1 minute. As soon as we fail to take this low out, then what that does is that it opens up this breaker right here. And you see that runs all the way up into the 15-minute breaker that was up there, right there, which is that one. Now, why didn't we just prefer the short? There's a very simple reason why I didn't, and why I don't think you should, why I don't think you can. And then I'll explain how you could get into that. Number one is you're in bullish conditions. It's Thursday. It may turn. You don't know that it's going to turn. So you don't just stand in front of that. I don't think that's not going to work, and I don't think that's a strategy we're going to stand behind. But you take the long when we fail to displace lower. You take the long up into the short. We don't turn. We see that it fails. Come back down to the 1 minute. And what do you see here? You see a test of the 5 minute. Just make the color correct so that it's easy to follow. You see a test of the 5 minute, which at 9:30 initially, as soon as it comes back up into here, you take that, and then it comes in, and then it holds it, and then it runs out, and it leaves a fair value gap, fair value gap and an inverted fair value gap, which holds and then is crushed. So as soon as it's crushed, now you're thinking that's short. Why are you thinking that's short? Because look at what time it happened. It happened at 10 o'clock. So then you go to, and you see these wicks right here, especially the fact that you have big bar, wick, wick. That's a 5-minute gap. It comes up to the 5-minute gap. Where in your bearish order block? Right where the liquidity, the last swing happened before liquidity was taken. You could say this one, or you could say that one. Either way, it comes right to it, and then boom. So that's how you stayed long until the market told you it was time to go short, and then how you went short just after 10 o'clock. That's it for today.